Good afternoon. I think all of you are at 11 a.m., so maybe it's good morning to you. This is Amy D'Agostino. I am a counsel at Chadbourne Parke, and I have been handling BEA compliance for clients for the past 10 years. We are excited today to be able to present to you basically what this compliance program that Porzio Life Sciences has created will do to help you get compliant with the statute. Chris, do you want to kick off something as well?
Sure. This is Chris Schultz at Porzio Compliance Services. Glad to be with you this morning and look forward to sharing with you some combined notes between Amy and I about BEA reporting obligations, and we will touch in part on insurance company specific reporting obligations during the presentation now. If you have questions, if you look in the right-hand pane on your GoToWebinar screen, there is a field where you can type your question in and press send. So please, we welcome questions. We will address them at the end of the presentation. And so ask away, and we look forward to answering your specific questions that you may have. So I'll turn it back to Amy now to start the presentation.
Thank you. So in terms of compliance, we can go to the first slide. Thank you. The International Investment and Trade and Services Survey Act could be considered an unknown or little-known statute. The stated mission of the Act is to collect data regarding U.S. interests in foreign businesses and foreign interests in U.S. businesses to further stabilize the United States economy. It does so by authorizing the President of the United States through the Bureau of Economic Analysis to collect ownership and economic data on the operations of U.S. companies and their foreign affiliates and international companies and their U.S. affiliates. The BEA is authorized by the Act and Part 806 of the Code of Federal Regulations to obtain data on international investments made by U.S. persons abroad and international persons in the United States. The BEA uses this data to provide a factual framework through which policymakers and the general public may address and analyze a number of issues. For example, the White House and Congress use BEA data to measure and prepare budget estimates and projections. And the Federal Reserve banks use BEA data to set monetary policy, and trade policy officials use the data to negotiate international trade agreements. Many of you, shocking, don't know about this statute, and I'll tell you that in 2008, one of my colleagues left Chadbourne and left me with a stack of paperwork. I was going through it, and I came across Form BE11, which is a required form for each U.S. person who owns or controls 10% or more of the voting securities of a business organized in a foreign jurisdiction. And I was flipping through this pastel-colored 13-page form and was shocked by the public reporting burden, which was estimated at 79.8 hours. First of all, I didn't know the statute existed. Second of all, the form was very hard to even figure out. So as I was looking at this form, I was intrigued by the public burden, and then I started multiplying the number of clients that met this 10% foreign ownership threshold. And I said, oh my goodness, is this possible that this sort of statute could exist without me knowing? The next thing I did was actually call the BEA and set up a meeting in Washington. So I went the next week, took a train down, was very surprised by the size of this government agency. You know, they have about 400 or more employees, very serious agency with a serious reporting burden for economic statistics. As you can imagine, can we go to the next slide? The BEA is collecting data on key economic indicators for our worldwide economy. And if you look at this slide, you can sort of understand why they take this reporting burden so seriously. And what I did was I met with BEA folks, and I've developed a really long-standing relationship with them. And I tried to understand sort of how they were going about collecting data, because as you know, you didn't know about this until, you know, recent client alerts started flying in your direction. And you said, wait a minute, many of you who had contacted me said, how did I not know that this existed? And really, so the BEA, before 2014, it was required that reports were due from any U.S. we can go to the next slide. This is helpful. So basically, if you're a U.S. person or business enterprise that holds 10% or greater interest in a foreign business, or a U.S. business enterprise that's owned 10% or more in a foreign, that is 10% or more foreign owned, you have a reporting burden under the statute. We can go to the next slide. And if you look at these surveys that are required, this is a helpful page because it shows all of the reporting burdens under the statute. You can see that there are quarterly, annual, and 5-year surveys, and then transaction-based surveys. So these reporting obligations have been in effect for, since 1974, and companies haven't really understood that they had this duty to respond. In 2014, and as I said, I've been handling compliance with this statute for over 10 years. In 2014, the government took some action. They said, wait a minute, maybe this is an onerous and overly burdensome statute. So let's only have clients respond with respect to the quarterly and annual surveys, which are outlined here, if they're in fact contacted by the BEA. Other respondents would not have a duty. That same theory did not apply to the 5-year surveys, which is why we're on the phone with you today, because you've heard about the form BE10, which is required by June 30th, 2015, and the form BE12. So these forms, the 5-year surveys, are the most comprehensive, carrying, with respect to the 10, a public reporting burden estimate of 144 hours, and with respect to the 12, you won't believe it, it's somewhere around 600 hours. And now with the BE13, this is a transaction-based survey. And I don't know if that's going to apply to those of you on the phone here today, because I think the focus is to talk about the 10. But Chris and I want to just tell you generally about the reporting duties, because we don't know when the BEA is going to change their mind and say the quarterly and annual surveys are going to be due regardless or not you're contacted by the BEA. That could happen, and especially in light of the new tone that the agency is taking with respect to data, I think that's likely. So that's why I think you should all be aware of this. And in fact, the other thing that you should know is that the agency, I have been handling, as I said, helping clients report under the statute for years. And the agency has been sending sort of these angry letters of late, and actually threatening financial penalties, and they've not done that before. So I can tell you that they're taking a very different tone with respect to the 10, and again, that's why we're on the phone here today. It is required by every U.S. company that has foreign ownership, 10% or more. Whether or not you hit an asset threshold, you still have a duty to report, even if you had $2 in the bank. So we just need to make sure you're aware of this duty and that the government is heavily enforcing non-compliance with the statute. And with that, I think I'm going to turn this over to Chris, who's going to speak a little bit about compliance generally. Thanks, Chris.
Thanks very much, Amy. Let's move to the next slide.
Oh, wait, this was me. Let me go back. I'm sorry. Sorry about that, guys. So I wanted to actually introduce Porzio Compliance Service and sort of how I ended up sitting here at this table today. So Porzio Life Sciences is a wholly owned subsidiary of Porzio Bromberg, and Porzio Bromberg is a law firm that's recognized for its litigation and regulatory compliance work for life sciences. I met Chris Schultz probably 8 years ago, and was very impressed by Porzio's commitment to helping compliance. So basically, their life sciences division improves efficiency of life sciences departments, including legal, regulatory, government affairs, and marketing and sales. They have tools that actually allow clients to comply with certain laws. And in the case of BEA compliance, Chris and I spoke maybe 3 years ago and said their tool that they were using for the life sciences industry could be implemented for compliance with BEA reporting. So it's been a wonderful journey we've been on, and to see this, sorry, is this a little loud? I apologize. I have some technical help here, so it's nice, thank you. So it's been wonderful to watch this compliance program, which is launching right now, and Chris is going to talk a little bit about the program and certainly how he can advise and get you all compliant with the statute.
So Again, thank you, Amy. And as Amy just noted, we've been collaborating for 3 years now in rolling out a BEA product. The BEA product is similar in many respects to some of the life sciences regulatory compliance programs that we are serving the life sciences industry with. And because of the complexity of the reporting, which we'll touch on in the presentation today, it's easily susceptible for an efficient software-based solution that lets companies subjected to the onerous reporting obligations of the BEA be able to comply at a lower cost. The next slide, please. So I just want to give this disclaimer in connection with my role at Porzio Compliance Services. We're giving you an overview of reporting requirements only, and you shouldn't rely on this to determine individual reporting obligations. We're not offering legal advice on the reporting obligations. For actual legal advice, please contact Amy, who will provide the legal advice side of things, and will work with us to fulfill your reporting obligation requirements using our compliance services work and program. So let's look generally at the financial test overview. How is the level of reporting requirements driven under the BEA regulations? It's driven by financial tests, and those include measurement of total assets, sales or gross operating revenues, and finally, net income. And we'll touch on the actual thresholds that are important drivers of the complexity of reporting in a moment. So I want to focus you on this BEA instruction. You would find, if you were trying to fill these reports out yourself, that the complexity of both the definitions and the instructions that guide you is highly complex. It's difficult to figure out what they're actually asking for, but this is one of the key thresholds and the measurement that drives whether you're a reporter of the entire report or just a subset of the reporting requirement is driven by whether or not you have greater than 300 million in either total assets, sales or gross operating revenues, or net income. So as you can see from this follow-on from the instructions, there's a more limited subset, as I just noted, if you don't have that $300 million level or higher with respect to those three financial measurements. And this is a significant impact on the reporting burden. So in terms of additional assessment criteria that are significant, one driver is going to be, consolidation rules with respect to your financial statements. Another is potential changes to your business structure. And finally, another driver is the percentage of your direct and indirect ownership based on your corporate organization. So what are the types of data that the BEA is asking you to provide? And we'll get into this with some detail. Amy noted before that recently the BEA has been stepping up its approach to enforcement for non-compliant companies that should be reporting. And at a recent conference we attended, there were economists there who spoke to the reliability of GDP data, which, as Amy noted in her presentation, is heavily relied upon by both Wall Street, by the President, by Congress in both budgeting and also in economic policy driven by the Fed. So it's a very significant number, a lot of reliance upon it, and what has been realized is that they need more reporting data in order to make the GDP data that they put out more reliable than it currently is. So with respect to the balance sheet, you're going to be reporting on assets, liabilities, shareholder equity. On the operational side, there are questions that relate to, the basic income statement items that, you would all expect to see. But frequently the questions delve in greater detail and beyond just your GAAP financial statements into subcategories of what would be line items on your income statement. And then finally, in terms of the entity and organizational structure and transactions, there are a number of non-financial questions that have to be reflected in the report form. Just to guide you a little bit in terms of the complexity that both Amy and I have referenced, this is just a selection from some of the questions, or one question in the Form 10 with respect to capital gains and losses. And I'm showing this to you just to give you some sense of how complex it is. Obviously, someone in your accounting department understands how financial statements work, what GAAP reporting is, and you'll see reference here to FASB pronouncement. Accounting standard codifications are referenced here, the FAS series, but oftentimes there are particular requirements beyond what the FAS provides for, so that there is data that won't necessarily come directly off of your financial statements in compiling the reports. Here, I'd like to touch on another significant issue in the Form 10. Both Amy and I get a lot of questions about this. They might be in the realm of, well, we just started this company up, hasn't had much activity. Do we really need to fill out this report? And the answer is yes, as the instruction indicates here. If you had, an entity that existed during 2014, you still have to file this report, even if it only existed for a month, a week, or a day. And there's particular guidance in the instructions in this regard in terms of how you treat your fiscal 2013 and fiscal 2014 data in the case of companies that have just come into existence during 2014. So let's move then to a more detailed look at the report forms, which Amy summarized earlier. Amy noted that both quarterly and annual reports are not currently required from companies unless they are contacted by the BEA, and that may well change in the future because it has changed with respect to some of the other report forms, and our expectation would be that the BEA is going to take the approach of identifying new companies that should be reporting via the new BE 13 form that we'll touch on in a moment, and eventually then we'll be requiring more companies to file the BE 577 and the BE 11, the quarterly and annual reports. As you can see, there are different thresholds, and the thresholds also differ for different report forms. With respect to the quarterly, there's no monetary threshold at all. So if you own 10% or more of a foreign entity, you will be required to file that report if you get a letter from the BEA requiring you to do so. On the 11, you can see the thresholds here. The report forms, BCD, that are required are driven by these thresholds, basically based on size of the company. And as you can see, the D form applies to foreign affiliates with, greater than 25 million, but less than 60 million based upon the financial tests that I outlined earlier. Let's turn then to the Form 10, which is the topic of interest right now because of the upcoming deadline on June 30. And this is what's referred to by the BEA as the quinquennial report or 5-year benchmark survey, which is a highly important report for them because of the extreme level of detail that's required here. And similar to the 11, you can see in the right-hand column here that the threshold amounts vary from what the thresholds are for the 11, and they're differential again based upon size of your company. That will drive what form you have to file, and each of these forms has different levels of complexity, the B being the most complex. In the case of the 10, there's no monetary threshold in terms of having to file some part of the 10, and you are subject to a mandatory reporting obligation regardless of whether the BEA has asked you to fill out the 10. That change Amy noted earlier, and it's a significant change for potential reporters here in the U.S. So let's turn then to the other side of the coin, which is reporting for foreign companies with direct investments in the U.S. It's a mirror obligation for foreign companies, and these reports that are outlined here are actually filed by the U.S. affiliate of the foreign entities, such that the BEA basically gets jurisdiction over foreign companies' ownership in U.S. companies via the U.S. presence of their U.S. affiliates. Again, here for the 13, we've noted that is now required for all companies that complete an acquisition or that establish a new entity or that expand existing entities and operations by greater than $3 million. So it triggers a reporting obligation for most activities that both medium and certainly large size companies tend to have. And so this is another service that we provide to assist clients in meeting their BE 13 requirements, and it's short dated. I think Amy noted this earlier. You have to file within 45 days after the transaction date. And then down on the bottom part here, we've noted the BE 605. That's the quarterly report. Again, that's only required if you're contacted by the BEA, but it has no monetary threshold. And then moving on, we have the BE 15, which is the annual survey for foreign direct investment, and then the BE 12, which is the 5-year benchmark survey, again, similar to the 10, a highly complex form, difficult to fill out, requiring a high level of attention to detail and a very careful quality control process, which is part of what we offer at Porzio Compliance Services to make sure the reports you do file comply with the statute and the regulations. Let's turn then to some of the insurance companies' specific reporting requirements, since, as we understand it, a number of you in the audience come from the insurance company world. There are across different forms particular additional reporting requirements as the BEA tries to measure and include in GDP and the other key indicators the activities of the insurance industry in the U.S. economy and abroad. So I'm just giving you an example here of some of the complex definitions here on the BE 10 Special Insurance Company section, which is Part 5, Section H. And the basic rule here is that unlike what you might be filing as an insurance company to your insurance regulator, this looks at the financial and other data required in a different way under normal GAAP accounting. and not the particular rules of insurance departments. This is the second part of that instruction, and as you can see, there are special measurements of certain gains and losses. There's detail with respect to the reporting of revenue, cost of goods sold, and sales of services. The other form that's required for insurance companies outside of the 10 and the other reporting forms that normal companies have to comply with is the BE 45. This is a mandatory quarterly survey that you must file if your activity levels, as defined below in the threshold section, are greater than $8 million. This form measures reinsurance transactions and earned premiums and losses that are incurred in connection with transactions with foreign primary insurers, and it also covers auxiliary insurance services such as consulting services, adjustment services, actuarial services, etc. And in terms of measuring the $8 million, as you can see, you take a look at premiums earned or lost on reinsurance that's assumed or reinsurance that's ceded. Then you've got sales and purchases of those services items, which I described a moment ago. It does exclude finite insurance situations, and it also excludes transactions with foreigners that are conducted exclusively abroad by foreign affiliates of U.S. insurance companies. So the BE 140 is the equivalent 5-year benchmark survey that's required of insurance companies. It covers the same types of transactions as I just outlined for the BE 45, and however, the threshold is much lower, greater than 2 million. Currently, the next reporting cycle when the 140 will be required is for the year 2018, and the reporting date for that will be June 30, 2019. So it's not something you're subject to right now, but it's something you should keep on your radar screen and your calendar because it does represent a significant reporting burden. Let me just note on that topic that I understand that some of you work with captive insurers. The rules are a little different there, and in that regard, for captive insurance companies that are owned by U.S. companies that are not insurance companies, filings are required under two other forms, the Form 120 and the Form 125, and Amy and I can advise you on those requirements if you have a captive insurer. So let's skip ahead then to compliance burdens, and we've outlined here, and I think Amy touched on the significant burden that the 10 and the other report forms have. Amy referenced the 144-hour, public reporting burden assessment of the BEA. In fact, that can be, more significant hours-wise to complete, depending upon the level of detail that you have to file. And Amy, I don't know if you have any comment on this aspect of things.
The burden, as I found out through helping clients, is real. And actually, it's based on the complexity, as Chris pointed out, of the forms themselves, which are very hard to understand in many cases, which data you need and how to get that data. And also in terms of finding people within your organizations or with your clients, for example, advising them who they need to talk to in order to get the specific parts of the form completed. So it's not a one-stop, just complete the form. And that's what's so great about what Chris is working on for BEA compliance, because we hope to have a system where not only will you get data that is, let's say you're a quarterly or annual filer, you could use that data that you're reporting quarterly and annually to then be submitted to the 5-year survey. So we're trying to make this more streamlined, and the government has actually been helping us make this easier because they understand reducing the public burden is not only good for respondents, but it's also good for the government. So,
Amy and I met with the investment division staff after the last BEA advisory committee meeting in May, and they're very excited to know that there's a potential solution for clients so that the reporting will be easier for them. And as Amy just noted, part of our service includes information that will allow you to compile the data over time so that it's not something that's coming up once every 5 years or once every year. It's something that you can organize in a fashion that'll become much more easier in the future. So, yeah, that's the 144 hours popping off the page.
Not too scary.
Just kind of fun. Try to scare all of you. But here we have, the corresponding estimates for the time required for the BE 11 and the 577, which we touched on earlier. And note that on the quarterly, if you're subject to those requirements now or in the future, it's a fairly short time window after the end of your fiscal quarter. And then, I think we can probably get that number to pop off the page as well at some point, but 633 hours for the 12 is pretty mind-boggling. And in fact, Amy, you might comment on this. When we talk to clients, they're desperate for a solution that'll make life easier.
Absolutely. I have a number of clients who have been reporting for years, and they've actually had to bring on a person just to handle the BEA reporting. And so, again, as I said earlier, this 633 hour for the 12 is an accurate number. And so getting a system in place will certainly help.
So similarly, in the case of foreign direct investment, for any of you that may be working with foreign companies with U.S. operations, you have the similar set of forms, similar set of sort of hard to believe reporting burdens. We'll just scroll through these slides quickly, and then this slide estimates how many reports a larger size company might have to file, and these aren't actual based upon the client, but rather based on our estimates. And one of the things that I mentioned earlier, which can affect the level of reporting required, is consolidation.
Yes.
Amy, maybe you could also touch on this from your client's perspective.
Absolutely. I do represent a number of clients who have more than this estimate that you've given here in terms of foreign subsidiaries. So and I think those of you on the phone can understand, any global enterprise typically would have 10% or more ownership, foreign or U.S., which we're looking at for both sides of the survey. So, I know in the past few weeks I've analyzed a number of clients and their corporate structures, and I would say that even the 300, here we have 393 potential subsidiaries. I've seen clients who have 2,000 estimated foreign subsidiaries, and so in that case, the potential number of reports to file, especially if they're now, once the BEA knows they exist under the 10 and they hit those asset thresholds, they will also be required to report the quarterly and the annual. So the potential number of reports to file each year that's absolutely correct, and so I think these estimates are accurate.
So what is the consequence of not complying? It's actually significant. We're going to outline the consequences, both civil and criminal, of failure to comply. So essentially, if you fail to report, you can be subject to a civil penalty of not less than $2,500 and not more than $25,000, and also to injunctive relief, essentially a consent decree that you would be confronted with, requiring you to comply in the future. The penalties are actually increased to $32,500, which you'll see down on the note at the bottom of the page, for failing to comply with the 577 and importantly the BE 13, the transactional form, which was newly imposed effective January 1, 2014, and will apply going forward. In addition, anyone who fails to report can be fined $10,000. If an individual, you can be imprisoned for not more than 1 year. And finally, any officer, director, employee, or agent of a company who knowingly participates in violations of reporting requirements can be subject to a similar fine, imprisonment, or both. So this just summarizes what we at Porzio Compliance Services do with our services offering. The first thing we do is a gap analysis to identify what reports you may have been required to file in the past, may not have filed, what you need to do going forward in terms of your BEA reporting obligations. Amy does this as well in her practice. Our service basically assists you as clients in navigating through the broad and complex data requests from the BEA, which we've outlined in the presentation. And then finally, we have a turnkey approach of gathering the data from you, completing the report, doing quality control on the report and reviewing it with you, and then filing it with the BEA on a timely basis. In addition, we have other parts of our services that help you to maintain the data and make it a more routine matter to collect it and have it available in order to comply with your reporting obligations. And I think, we touched on the Form 10 in some detail, and that's a topic of importance to you right now, since it is now on a delayed deadline basis. I think Amy noted this earlier. The original deadline of May 31st has been extended to June 30 by the BEA because they got lots of calls from companies that need to comply that were struggling to comply. And Amy, you might note the further extension that both you and we have gotten from the BEA.
Right. We were able to obtain a further extension to July 31st for the clients of Chadbourne, and also I think for any clients of Porzio as well, right?
That's right. Yeah. So we both have an additional 30-day window for those of you that might have a Form 10 obligation that you're behind on and need some additional time to comply with.